Okay, today we will discuss about accounts receivable employees. That means salary loan granted to the employees. Okay, first of all, we have to learn the meaning behind salary loan and accounts receivable employees. Okay, employees salary loan refers to the amount of money that an employer owes to its employees as a result of salary loans granted to them. Here, employer owes to its employees. Why? Because of salary loan granted to employees. That's why employer owes to employees because salary loans granted to employees. First, you have to understand the concept. Okay, when employee need money urgently, they may request a salary loan from their employer. This loan is typically deducted from their future salaries. Okay, now grant loan and it is deductible from their future salaries. The amount of the loan granted to the employees is recorded as an account receivable by the employer until it is repaid by the employee, because now the loan granted. Okay, now the loan granted, it is accounts receivable by the employer until it is repaid by the employee. Okay, I hope you got concept clarity. Now we go for example. Let's say an employee requests a salary loan of 5,000 rupees from their employer. The employer grants the loan and records it an accounts receivable. The employee agrees to repay the loan in monthly installments of 1,000 each over the next 5 months. So what is the example? The employee requests a salary loan of 5,000. The employer grants the 5,000 loan. So how many months? 5 months. How much per month installment? 1,000. So this is the example. Now we go for accounting treatment. The salary loan granted to the employee is recorded as an accounts receivable by the employer. We know that. Why accounts receivable? Also we know, covered in concept. The employer may also record interest income on the loan if there is an agreement to charge interest on the loan. Sometimes some employer may charge interest also. When the employee repays the loan, the employer will reduce the accounts receivable and record the payment as cash received. This point is we can easily understand. When the employee pays the loan, automatically it reduces the accounts receivable account. Okay, and record the payment as cash received. Now we go for entries. First entry, when the loan is granted, employee salary loan receivable account, employee salary loan receivable account debit, how much? 5,000. Credit cash account 5,000. Why we debit employee salary loan receivable? Because it is a accounts receivable. That's why we have, it is a asset to the employer, that means company. So that's why we have debited as per basic golden rules of accounting. So what is the entry? Employee salary loan receivable account debited, debit 5,000, credit cash account 5,000. Initial entry. Okay, next, when the loan is repaid. So when the loan is repaid, we receive as a employer cash. Okay, debit cash account 1,000, that means first month debit cash account 1,000, credit employee salary loan receivable account 1,000. So we receive cash, that's why we have debit. We have to reduce employee salary loan receivable account 1,000 because we receive the cash from the employee. That's why we have to credit employee salary loan receivable account. Okay, this is the simple entries. Next, problems and solutions. we know it is a simple example. Okay, next, delays in repayment. If an employee delays repayment of the salary loan, it may cause strain on the employer's cash flow. So the employer may need to follow up the employee to ensure timely repayment. So the employer follows to employees to ensure timely repayment. Next, accounting for interest income. If interest is charged on the salary loan, the employer needs to account for the interest income separately. So we have to account it separately for the interest income. Next, default on the loan. If an employee defaults on the salary loan, the employer may need to take legal action to recover the amount owed. Okay. Other concepts related to accounts receivable include bad debts, allowance for trade. Okay, it's not related. So here one concept covered. So what is the concept? Interest received. For the employer, it's a interest is a income. That's why we have to credit. So cash account debit. So interest on salary loan. Okay. So it is a simple concept. So what is the concept? When employees need money urgently, they may request a salary loan from the employer. This loan is typically deducted from their future salaries. Okay. Thank you. Subscribe and share, like.